Money. Money, money, money. It's something that I think motivates a ton of agents and also causes a lot of agents to get out of the business, right? A lot of people get into real estate because they see the glitz and they see the glam and they see these HGTV shows and it's about the Benjamins, right? They want to come and they want to make a good life for themselves and their family. But at the end of the day, money in real estate can be tough. It fluctuates. So we're going to talk about the 4 rules, the 4 money rules that you need to follow when you're in the real estate industry. But first, as always, this is the After the License channel. I'm Jeff Bittner. Like, comment, subscribe basically anywhere you're watching this episode and go follow us on all the social media channels. So the 4 rules of money are going to be so important for you and for your business if you want to build something sustainable. So the first money rule is keeping your business expenses low. You have to keep your business expenses as low as possible. You have to look at every line item as in your business and say, is this necessary? Is this important? Am I actually getting value from it? And if not, you should try and cut it. Because if your business expenses aren't as low as possible and every dollar isn't going to work for you and your business, you're going to really struggle, right? Your income is going to come in, you're going to need some to actually live, and you're going to be doling out a ton in your business. So when you're brand new, keep your business expenses as low as possible and make sure you keep them in check. It's important, in my opinion, to actually keep track of your business expenses. Use something like QuickBooks. Go out and take out a separate banking or checking account just for your business expenses so that you can keep track of them. What are you spending every single month and what are you expending them on? And again, if it's not actually adding benefit to you or your business, you should look to cut that, because when you're very early on in your business, having too many expenses can cause you to go bankrupt in your business and force you to leave the business. So make sure your business expenses are low. The second money rule is understand your personal monthly output of money. Again, this is something that a lot of real estate agents struggle with. Again, in the business, your income, especially when you're just starting out, is going to fluctuate. You're going to have one month where you have a couple closings, and you're going to have 2 or 3 months where things dry up. Then you have another month where, again, you have some success. If you don't really understand your personal monthly output, what does it cost you to live, to pay for your rent or your house, to pay for the car, to put food on the table, to put your kids in school, whatever that looks like. If you don't know what that looks like, you're really going to struggle when you get a big paycheck and maybe spend more than you actually should or need to on your business or other ancillary things, right? Because it can be exciting when we have a couple closings, we go buy ourselves a little gift. If we don't know what our personal monthly output is, we can't actually go out and save for those things and be mindful of that and actually make sure we are able to live past this month. So understanding your personal monthly output and keeping that as low as possible until you have some steady income can really help contribute to your success. The third money tip is invest in your business. Invest in marketing for your business. Now, this might seem contrary to keeping your business expenses low, but it's really important to actually invest in marketing in your business. This is something that I've seen so many agents struggle with, where they have a good first year, they have a good second year, and some things went well for them, right? Maybe they had a referral or they had, a family and they all bought some houses. Well, they had that success, and guess what? They didn't invest any piece of that back into their business, back into marketing, back into lead generation. And so when I talk about keeping your business expenses low, I talk about keeping them low for things that aren't actually benefiting your business. Well, guess what? Marketing, lead gen, that's what's going to cause new deals to come in. So make sure you're keeping your business expenses low, but make sure you invest in your business. Now, there's no magic number for this, but I really like 10%. If you can save 10% of all of your real estate income and invest it back into your business, invest it in lead gen, invest it in marketing specifically, things that are going to bring in new business, that seems to be a really good, healthy number for people, especially when you're just starting out. 10%, so if you have a $10,000 closing, guess what? You're going to take $1,000 of that and you're going to invest it back into your business, lead gen, marketing, so that that new business can come in. The fourth rule is make sure you pay your taxes. Yes, Uncle Sam, we have to be so mindful of taxes when you are an independent contractor and when you're running your own business. Because if you're not smart about it and you don't think about it in the beginning and be mindful about it, guess what? You are going to have a huge tax bill with some penalties at the end of the year, and that can bankrupt your business. So I'm not going to give you tax advice here, but I'll tell you what I've done and what I've seen other agents do that can be really helpful. Tip number one is, again, keep your business account separate, okay? Keep your business account separate. So when you have income, you put it in that account and it's not on your personal checking, because now what you can do is you can make smart decisions with it, right? When it goes right into our checking, it can be really hard to then take a certain percentage and remember to save for taxes. So input that money into a business checking account, whatever that looks like, and make sure you save a chunk, a certain percentage of that, and actually put it in a separate third account specifically for your taxes. So for me, when I was an active agent, I always did 20%. That's what my accountant told me to do. And that was pretty accurate for me. Again, it's going to depend on your situation. It's going to depend on your expenses at the end of the year. It's going to depend on your income. But for me, saving about 20 to 25% of every single one of my paychecks and making sure it's in a separate account that I never see, it's not in my business expenses, it's not on my personal checking, that helped me with taxes. Because at the end of the day, if you don't save, guess what? That bill's still going to come. And as an independent contractor, most people, again, talk to your tax accountant, you're going to have to pay quarterly taxes. You have to pay them every single quarter or you get a penalty. So make sure every single closing, save a chunk, 20 to 25%. Make sure it's in a third separate account, not in your business account, not in your personal account, so that that money just sits there. You don't invest it. You don't do anything with it. It just sits there because it can be so tempting, especially when you have a low month, to go and put it towards rent or to put it towards your business. Well, guess what? Again, if you don't save for taxes, that tax bill is still going to come, and it can be so tough. So many agents in the industry miss this piece, and they're paying off huge debts to the IRS because they just weren't smart and mindful about this in the beginning. So pay Uncle Sam, be smart about it, save, make sure it's separate. And those are your 4 money tips. Okay, guys, I hope that was helpful. Drop a comment below what questions you have about money, about saving, about your personal or your business expenses. As always, like, comment, subscribe, and I'll catch you on the next one.